Good morning, and welcome to episode 213 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, February 26th, 2025. Ukraine's Zelensky is prepared to sign a mineral rights agreement with President Trump at the White House this Friday in the hopes of inching closer to a close to hostilities between Russia and Ukraine in Europe. In the Middle East, Hamas is preparing to restart hostilities between Israel if the ceasefire that expires this Saturday cannot be salvaged. Yesterday and overnight, the House approved President Trump's big, beautiful budget bill, and that happened largely along party lines. Next stop is the Senate. Consumer confidence numbers came out yesterday, and they represented the sharpest decline in consumer confidence in over 3 years. Concerns about the labor market, concerns about future business conditions, future income, and future employment prospects all dampened consumer sentiment. Let's take a look at the numbers for the precious metals over the past week, which are all down save platinum. So gold is down 0.9%, a little less than 1%. It trades at $29.1470 an ounce today. It was $29.42 an ounce last week and actually hit a high this past week of $29.74, one of 11 or 12 highs thus far this year. Silver down 3.9%, trading this morning at 31.75. Silver was $33.02 an ounce last week. As I mentioned, platinum is unchanged, trading at $992 an ounce, just like it did a week ago. And palladium is down 4.4% to $965 an ounce. It was $1,009 an ounce last week. With silver falling deeper than gold, largely and primarily yesterday, the number of ounces of silver it takes to buy an ounce of gold has increased. It takes 91.8 ounces of silver to buy an ounce of gold today. Last week, it was 89.1. And the U.S. dollar is under pressure with falling treasury yields. It's trading at 106.55 on the old index. It was 107.18 last week. So we saw a big bout of profit taking yesterday. And that continues in an environment where we are seeing the lowest premiums I've seen in now 29 years here at Asset Strategies. Yes, today is my 29-year anniversary. I remember as if it were yesterday coming up to interview with Michael and Glenn so many years ago, and I am so thankful that they said yes and that I did too. It's been an amazing run for 29 years. I'm looking forward to the next 29 because I've spent it with wonderful partners, incredible staff, the best clients on earth, and I look forward to serving you for another 29 years with this incredible staff. But the way to protect yourself and make sure you're going to be there working with us 29 years ago is to help you keep what's yours. And this low premiums coupled with the dip due to profit taking is a great opportunity, a great way to buy well. And I consider you take advantage of it. As always, we'd like you to go ahead and follow us on our YouTube channel, subscribe, like us, send us your comments and questions, follow us on social media, take our twice weekly Always Something Interesting alerts in our once monthly information line newsletter. But in the end, don't ever forget, getting rich starts with keeping what's yours.